All right, there's been a lot of interest in our employee profit sharing system, and I want to put together this quick demo video of how we can use this system not only to figure employee profit sharing percentages, but to also create a nice job costing spreadsheet that can really help you fine tune the numbers you need to know and where your profit really lies. So I'm just going to run through this really quick. This thing does a few different things, so I'm going to show you the end and then start back at the beginning. This is our summary page. Basically, this is the page you will use the most once you get this, the numbers put in and set up and ready to go. From there, I'm going to show you how, I'm going to start clear back to the instructions and show you how we do this. So we've got some instructions in here. The main one you need to know right now is that the gray filled fields are the only ones that you can click and change. None of the equations can be changed. You can't screw this up. You can't change something and get something thrown off. It's all in there. So that's what the instructions, that's the main one. There's a few different little tips in here. Go ahead and read through those. But let's start with overhead. So what we do in ours is we've created this one single sheet just for overhead calculation. We use our overhead as a percentage of gross sales for yearly. And then we also recommend that we take 3 years and average those out for overhead. That's so some of those large overhead expenses can get swallowed up over 3 years to more accurately describe what your running overhead is. So I want to show you how this would work. I'm not going to go through every single line item in here. I'm just going to get it to where we can get a 17% overhead. And then we'll go from there. So as you can see, if we fill this out, let's say our gross sales, we're shooting for this 17% number. It automatically calculates it. It fills it in. If we go through here, it would continue to change that. Next is the payroll burden and base labor. So what this is this is basically just how to figure your payroll burden, what it costs you to have payroll. This section over here to the right of the screen, the labor classification rate, this is just a very basic thing to show you what your break even would be, which is basically labor rate plus payroll burden. So we're going to do this, and again, not filling out every line item. I just want to drop in a 17% payroll burden, just so we have a number that is returned up here. Again, it's really nice to average this out for 3 years, unless you get something major changing in your payroll burden numbers, then you may want to eliminate the lowest year to make it more accurate. But anyway, so we get this returned here. So now, once you've got these two down, these are basically just knowing your number pages. The summary page will take all this information and bring it back over into where we take out our overhead and our payroll burden, etc. on here. But that comes from this company information page, okay? The company information page is basically just a basic page where we've housed a few things. Your overhead percentage of gross and your payroll burden percentage, which are calculated from these sheets, actually come and are automatically returned here and here. Now, if you already know your number and you don't want to use our sheets, you can select this cell. You can see the formula come up here. You can just type in your percentage and move from there. But we have it originally set up out of the box to calculate and drag that over for you. If you pay a sales commission percentage based on the total job cost, your contract price, that's where you would enter it here. We actually have a place if you're paying someone, a salesman 1 or 2% as a sales commission. For each sale, that it'll take it out to get you accurate profit as well. Now, the employee list. This is where we start to really get into the true double sliding scale of things. We've got a place here, obviously, for employees, the level they are and their hourly wage, which the name and the wage is very, very self-explanatory. But the level is where we get one of these sliding scales, because we don't want everyone on a job to make the same percentage. As far as employee profit sharing, we want to reward our best guys with more of the pie, if you will. So we've got these available levels here. A obviously is your highest, best guys only, and as you can read down through there and see, we even have a category for no profit sharing. This is just people who's on the job that just you do not want involved in this system. I am going to drop in a few employees here. We're going to make Bob a foreman and pay him about $30 an hour. We're going to put Frank in here. He's a good hand. Let's give him a C rating. But he only makes about $22.50 an hour. And then I'm in here. but I'm just a laborer. I just fresh. I work real hard, but don't know much yet. So we're gonna put me on profit sharing, but at the lowest level. This is just so you can kind of see the difference in how this works. So basically, this employee list is set up so you can put quite a few employees down through here. You put their level in, you put their wage in, and what that does now is we'll return it back over here when we put in Bob. You can see that his level, his pay per hour is already put in. You know, and then we had Frank, and then we had little old me. So we've got that, and as you can see, it comes across and fills out this information. So that way, if you ever want to raise someone in their level, or if you want to give them a raise through their pay, you adjust it in the employee list, and it's done. Every time you put in a new job, you can do that. And also, it keeps you from having an entire employee list on the summary page. It's just, you can just put the people in there that worked. Okay, so we're going to do this sample job, Jane Doe. And we're just going to shoot from the hip with some of these numbers. We're just going to make them up here. Let's say we have a $12,000 project. It's got about $4,000 in materials. You know, we had $1,000 in our equipment usage. We had another $1,000 in our other expenses. We didn't have any subs. Obviously, we didn't fill in the sales commission over here on the company information page. So therefore, it's not going to come over here in this sales commission blank that you can't even select anyway. So as you can see, this is already, as we're adding this in, it is calculating our the pre-employee profit sharing net profit percentage, which I would call a true net. As you can see, we've got an overhead calculation, which is coming off of our company information and overhead calculation sheet. It's already figuring that in. It's a percentage of contract price. So we're getting clear down to the labor and profit. Well, let's say we had 10 hours each for these guys. As you can see, all these calculations are working as we go. And it kind of shows you what's going on here. So what we do is we get our pay per hour, we get our base pay. This total labor is the labor burden added in, your payroll burden. So then it comes back up here as our total labor cost. You can see it's changed our net per profit percentages and what we're paying out. Now, these orangish yellowish boxes, however your screen looks, you can see where it's returning the employee and their employee profit on that project. This is based off a couple different things, and this is where the other sliding scale comes in that we really truly love, because what we're trying to do is focus this completely on true net profit. This way it encompasses material waste, equipment neglect, all the things that should be charged to that job can't affect their actual profit percentage. So therefore they're really trying to keep the expenses down as much as they are the productivity up. So it's a double-edged sword there. Our goal with this system is to get anywhere from about 2 to 5% of pre-net profit down to the employees. So you can see that if we paid out these three amounts here to the employees, that cost here, we'd have payroll burden on that cost through paying it through payroll, and our true net post after paying everyone, including the employee profit sharing, we would still net 24.8%, only down from 26.1. And you can also see the average wage per hour, what this does. On a job like this, where you've made, pre-net of 26.1%, Bob, your foreman, he's basically getting an extra $6.72 an hour on that job. That's pretty decent. He made an extra 67 bucks in a day, and as you can see down through here, these percentages obviously change as we go down to where me down here as a laborer level, I got an extra $2.68. I'm pretty darn happy with that if I'm a laborer. That's a pretty good bonus for a laborer. So now where our second true sliding scale comes in, and this is really the joy of this, is that as this pre-net goes up, we start to see these percentages go up. So let's say, for example, part of our materials was waste, and we actually only needed $3,000 materials, but Bob took care of it this time. He figured it out. Now, you can see where our profit percentage jumped up, our pre-net jumped up pretty substantially just for saving that $1,000 in material waste on that job. And therefore, we're still sitting at about 2% here is all we're setting, but our numbers went up. Now he was getting $6 and some change an hour extra. Well, now he's getting $11 and some change extra. You're still making more money. You're still ending with a higher net profit, but you're basically incentivizing Bob, Frank, and even me at this point to work together to eliminate that material waste, eliminate everything on the job, because we're all going up as the job does better, including you as the owner. That's really the basis of what this system does. Is it takes a double sliding scale where as net profit goes up, their percentages go up. And also the second sliding scale of these levels of being able to adjust people on the fly. For example, let's say that I learned something and you want to move me up one. If you move me up to a D, you can see where your profit's not changing very much at all. It's 39 something here. Now it's basically 39 again. I'm just picking up just a little bit more on my paycheck from the employee profit sharing. It's a way to give someone incentive or a raise without technically coming in and raising their base. So that you've got multiple ways you can give raises this way as well. That's basically the entire system. Obviously, we have a system tab over here that's completely blacked out because it is literally pages and pages and pages of sliding scale formulas that if it was easier to black out than take a chance that someone would screw one up. So it is locked and blacked because it is confusing. It's taken 20 years to perfect this system and get it to where it's as simple as it is now. And I'm really happy that we're finally getting this thing out into the hands of other business owners, because it has worked wonders for our company. Driving teamwork, driving higher pay for our guys, loyalty, all this stuff is come into play with us. And we're really proud of this system. It's a lot of trial and error. Its work is done. You can literally get this and plug and play it, spend some time with your overhead calculations and your payroll burden numbers, which are numbers you need to know anyway. And bam, you can start running employee profit immediately without having to think up all these complex calculations and how you're going to account for materials and how you're going to account for extra labor. This takes care of all that for you. It's just ready to go. It's pretty amazing. So I hope you enjoyed the video. If you have any questions for us, please reach out to us. You can reach me at buildingmore@outlook.com.